to The Retirement Guys. I'm Mark Elliot here with Doug Harbaugh. Doug, of course, an advisor with Strategic Wealth Partners, where they have decades of experience under one roof helping folks with retirement plans here in the Independence, Cleveland, Northeast Ohio area. If you'd like to go to the website to find out more, it's trg.swpconnect.com. trg.swpconnect.com. And, of course, you just like to give Doug a call. It's 216-800-9890. 216-800-9890. We'll give you that information throughout the program. Glad you're with us today. And, of course, also with us, an investment strategist, Luke Lloyd. Luke, welcome. How are you?
I'm doing well. How are you doing?
I'm doing well. And, you know, Doug, on your website, trg.swpconnect.com, let's maybe touch on a couple things that are on there. The importance of maybe finding more about where you are on your road to retirement. You have a couple things you can do on that website. There's Wealthalize, and there is the Portfolio X-Ray. Should we do both? Should we do neither? Should we do one of them?
We'll just go through none of them. We'll make that real simple for you guys out there. Just don't do anything and sit on your hands a little longer and hang out in the market volatility with that golf course portfolio and keep kicking that can down the road. And
that's what a lot of people seem to be doing right now.
Yeah, I mean, why would you want any additional help?
Beats me. I mean, it can only help you, right?
Yeah, no, I guess it could only help you. Don't do anything. Just keep kicking the can down the road and cross your fingers and hang out with that guy that doesn't do anything other than call you on your birthday and only gives you advice when you ask for it and only wants to sell you things.
That's the worst mistake people make is procrastination.
Right. No, there is a couple things on the website that you can do that you can use as a litmus test to see where you stand. I encourage people to check them out at trg.swpconnect.com. The first one of that being is the Portfolio X-Ray. We utilize that as a way to identify issues within your investment structure. So what it does is it has 10 holdings that you can put in there. You know, most people don't have more than 10 holdings. If in the event that you do, you can contact me directly. And what we'll do is we'll put together a customizable report that'll let you know what you should be holding or shouldn't be holding. And it is very specific based on the economy. It's not that generic nonsense that everyone puts out there. Oh, you're 60, you should be holding these bonds and these target date funds, because I don't have a better answer than that. You know, that's typically what you get out of golf course portfolio people. So if you want real answers, you're going to go to trg.swpconnect.com. You're going to go to the Portfolio X-Ray at the bottom of the page, click on it, enter your top 10 holdings, and we will give you a customizable report that, again, lets you know maybe if you're taking on too much risk, maybe you're taking on the wrong secular risk, wrong sector risk, whatever it may be. There's a lot of different forms of risk. There's interest rate risk, right? There's over-concentration risk, right? There's business risk.
Right.
There's
inflation risk. There's all kinds of stuff.
There's all kinds of different risks out there, and a lot of these lazy advisors won't take the time to identify what the real risk is. They're going to go, gosh, you're 60, you should be in 70% bonds, of course.
Yeah.
Right, but they don't even know the bonds that they're selling you, and they might have some kind of, quip in regards to, well, the Fed's, buying some more bonds, so these things are going to be stable. Okay, that's great, and they're going to grow at zero.
Yeah.
So if you want to know how to do things better, you've got to go to Portfolio X-Ray at trg.swpconnect.com. Wealthalize is a whole nother animal. I implore you to check it out. It'll let you score how your relationships are in the financial world, and kind of give you a better understanding as to maybe some of the areas that you should change. But first and easiest step for the customizable report is the Portfolio X-Ray.
All right, I like that, trg.swpconnect.com. And that's kind of what I wanted to talk about, because you guys hit it right on the head. And Luke, I mean, there's no question. Both of you guys understand that most people do this themselves. I think there was a CNBC survey that said 75% of people in America manage their own money. But my question is, managing your money when you're 30 and 40 and you're letting it ride in the Wall Street world because you don't need it yet, you're just trying to grow, so you're taking more risk. But managing your money when you get into retirement and now you're controlling your own paychecks, that's different, isn't it? I mean, controlling your accumulation phase versus your distribution phase, those are two different animals, aren't they?
So Luke actually just came across this. They're doing a different program for younger adults. And a lot of the younger people are hesitant to work with people in general because it's the first time. Whereas I think people in their late 50s and 60s have already worked with a few advisors, understand what it is.
You stole my line, Doug.
What's that?
I was going to say that, but just completely took it from me.
Learn how to flow with it.
I know.
It's okay.
I got you.
That's how we segue into what you're going to talk about, and maybe an example of what happens. But no, everyone is different based on stage. But yeah, Luke is currently coming across where people are kind of used to doing it themselves.
Right. Well, if you do it yourself, hey, Mark, if you do it yourself, are you a financial advisor or are you a financial planner yourself? Probably not. Most of these people are not financial advisors or not financial planners. So if you do something for the first time, and I've talked about this before, it's probably not your best try is the first time. So, you only get one chance at this. And if you're 30, 40 years old and you're setting up your own accounts, you're setting up your own investments, your own whole situation, it's probably not the most optimal. So I think that's why it's really important just to kind of get the information about what's out there and what's around and how you can position yourself the right way. And that's just by getting more information.
Right. One of the common themes that I see, Mark, is a lot of people are always trying to hit a home run. So the do-it-yourselfers are people that are kind of hesitant to work with somebody. They picked a stock and they were real lucky. They had a large concentration in one thing and they made a bunch of money. All of a sudden they think they're stock wizards.
Yep. It's a big behavioral finance error.
It's a huge behavioral finance error. And with that being said, they fail to understand the economics of the world. And that's where when we were talking about being in the wrong sectors or understanding that you don't necessarily have to be in a full bear market, but secularly, meaning that certain sectors are in a bear or certain sectors are in a bull mode, right? Being able to kind of toggle on off, which a lot of people don't understand how to do without removing emotion, right? Yeah. And they can't. And that's why people hire us, because it allows for us to dictate the direction as to where they should be financially. Right. Rather than just going, I bought that stock the other year and then someone just posted that Lennar beat their earnings, so I'm going to put all my money into that. Really?
Yeah.
So I think that's one of the problems that we see with do-it-yourselfers is number one, they don't understand the economy, or they've actually lost their butt on something before and they're holding on to something in a hope for recovery. And sometimes you need to do something called recognizing sunk cost and moving on in order to get better in life.
Right, and just being disciplined to do that is key number one, right? But Mark, like you mentioned, when you're 30 years old compared to when you're 60 years old, your situation is always changing. Because of that, it's very, very hard to keep up with the changing information, the changing environment, all the different rules, regulations. We just had the CARES Act come out. There's always things going on. And, if you have a job outside of, investments, it's basically a second job to keep up with the investments. And that's why most people don't have the time to do that. So you have to find somebody that's willing and capable to keep up with your personal situation and understand your situation just the same amount as you.
Glad you're with us today for the Retirement Guys with Doug Harbaugh and Luke Lloyd with Strategic Wealth Partners. If you'd like to call Doug, ask some questions, maybe you've been doing it yourself, and you're like, you know what? At the end of the day, I don't want to make any costly mistakes that is going to affect my success in retirement. Great time to call the team, 216-800-9890. There's no cost for this. And making the phone call is not committing that, yes, I'm going to be a partner with Strategic Wealth Partners. It doesn't mean you're going to be a client. You might be, you might not be. It's a two-way street because you've got to work into Doug's team's thoughts as well. But if you don't pick up the phone, how are you going to know any better? Right? 216-800-9890. And I do think this is interesting because to me, and I go back to kind of my sports background, I wish I'd have been a sports psychologist. I coached golf at the Big 12 level. It was actually the Big 8. I think it was the first year of the Big 12 was my last year at Kansas State. So I coached 7 years of college golf. I coached 3 years of college quarterbacks. And I can't think of a better knowledge to have would be sports psychology, dealing with golfers or quarterbacks. And I think there's a lot of psychology that goes into dealing with retirees. And I know, Luke, you're talking about, behavioral finance and all that kind of stuff. There's psychology in this whole world you're in, isn't there?
Oh, it's all psychology. I mean, not only from a person-to-person communication basis, but from the investment side as well. I mean, that's really what the market is it's understanding how people react to different scenarios and changing environment. I mean, yes, we have algorithms, we have all this technology, we have these computers doing a lot of the trading nowadays. I mean, 90% of the trading volume every day-to-day basis is our computers. It's, providing liquidity. But still, what's moving the markets is just basic psychology and how humans interact and perceive the markets. So really, that is what we do. We're just basically psychologists, aren't we, Doug?
Yeah, and I think some of the right now is those markets or FOMO can actually drive more of the upside, but can also drive a lot of the downside.
It goes both ways.
Because we have record levels of cash just sitting idly.
Yeah.
So it's very possible, for significant levels, again, of volatility going forward. And I think that's what you need to understand is going into retirement or going into any spending phase where you're spending your accumulated assets, that you need to have an order of operations and have those things taken care of. And I don't think a lot of people think about that when they are, dealing with investments, that structurally there's certain things you hold long and there's certain things that we need to be a little flexible on in order to make sure that when we do need that liquidity for an event, we're not selling, positions that we don't want to be selling.
And I think if you apply psychology to what you just talked about, how we have record amounts of cash, it is propping up the markets because FOMO is kicking in. So people are starting to buy in a lot. And because of that, it's creating a bigger bubble. And bubbles can go on forever, right? Prices can be propped for a very long time. So the key is when the bubble does burst or something does go wrong, that you are prepared and positioned correctly for when that bubble bursts. And we saw some of that burst here because of the coronavirus situation in March and April, right? But could that happen again in the future? Absolutely. So you have to be prepared and make sure that you do understand that things are going to change and you do have to change with that.
Right, and it's like some of the volatility last week, when we're seeing a 7% decline in a day, some of that's actually smart sellers looking at the technicals and seeing the island form. Yeah. And, whoa, look at that.
Island. Oh, are you talking about Fibonacci?
Do you know about the island?
I don't know.
So when an island forms, you hit a certain level, it creates a gap on each side in the technicals.
Gotcha.
And
you're reading these books.
When the island forms, right, you typically see smart sellers because we're at an overbought range, and the smart sellers liquidate out. And then what you may have today or Friday is people buying back in, and these are the retail investors thinking that, well, the market's come down and now I'm going to hop back in a little bit. Yeah. Where the larger traders are moving out of the positions for a reason.
Well, if we're talking technicals, I also saw a gap down or a gap fill. So what that means is when there's a gap, that means the market opens either higher or lower than it did the night before, the day before, and there was no trading at these prices. So when there's a gap formation, there's not a lot of buyers and sellers, so it moves quickly within that range. So that fall from 3,200 on the S&P all the way back down to 3,000 was actually just a big gap fill.
It was 29.92.
At the low, yeah, 29.92, but you know what I mean, it's close enough, 3,000. But anyway, technicals are a great way to look at the market, but not only technicals, you have to look at the fundamentals.
Correct.
And nobody's arguing that fundamentally we're overvalued, but we're trading at 23 times, which is historically we're trading at a high premium.
I wonder, can you explain in the most layman's terms possible? I'm curious if you're actually capable of speaking in basic tongue.
Yeah.
What trading at 23 times is.
So you have to look at earnings, the earnings on the S&P 500, and then you take that earnings and take a multiple on that, and you multiply that.
Oh man, you're already being too complicated for the listeners.
Really?
Okay.
So companies generate revenue, right? They generate profit, and from that profit, we can arrive at an earnings number for the 500 S&P 500, all the companies in the S&P 500. We take that, and if you times it by 1, that's your one multiple. So a 16 times multiple, the earnings times 16, that's what we averagely trade at on the S&P 500.
So that's your what?
So that's your price on the S&P 500 index.
Is it a PE ratio?
That's your PE ratio.
Oh, look at that, how you use PE ratio and multiples are the same thing, right?
Right.
and that's where I wanted to see if you could actually explain it. It's the amount of dollars you need to invest for $1 of earnings. The simplest way to explain it.
I thought I was doing pretty good there.
No, you already went off the deep end. So we're trading at a 23 multiple right now, with the historical multiple being at 16, meaning that we're expensive. Right. So it's expensive to put new money to work in the market.
That's why you have to be very selective.
Correct.
That's why it all comes back to the active management versus the passive management, right? Passively, all the mutual funds that you own, probably in your 401ks, they're all tracking the index that owns everything. And because you own everything, your portfolio is going to react like you own everything. So being active, being selective, that's going to add more alpha. Outperformance. That's what I see. I saw you look at me there. Outperformance. Alpha is outperformance in the long run.
Right. So again, I wanted to see if he was capable of speaking in basic terms to help people understand that the market's kind of expensive right now. And I'm not saying that it's a terrible time to be deploying fresh cash, but you need to be smart about how you deploy the cash. If you're in the market, you're in the market, right? But you need to be investing in the right sectors, right? You need to identify areas where they can be hurt significantly based on long-term effects of the coronavirus, right? And that's where we're going to see smaller or mid-sized companies have more volatility in the long run, and focusing on U.S. domestic companies that have strong balance sheets. But again, if you want to know what those companies are, well, obviously you got to call me to get the secret sauce, but that's 216-800-9890. Let me show you how to do it better. Again, you can go to trg.swpconnect.com, check out Portfolio X-Ray, or call me directly at 216-800-9890. Let me take a look at the holdings that you have, and I'll give you a customizable report that'll let you know if maybe you're taking out a little bit too much risk, or maybe not enough risk, or maybe you're just in the wrong risk category altogether. Yeah. All right, so again, it's 216-800-9890, or go to trg.swpconnect.com.
So here's what we're talking about today. Alphas and PE ratios, which I have no idea what any of that is. So
he just
thanks for
it to you,
clarifying that so smoothly, Luke. That was fantastic. We're talking about why in the world do basically 75% of Americans not get financial advice from a team like Strategic Wealth Partners. Why do we decide we know better when we don't really know what we're supposed to be doing? We don't know the X's and O's of financial planning, of retirement planning. Why are we doing it on our own? So that's where we're going. Stay with us. A lot more to get to. This is The Retirement Guys with Doug Harbaugh and Luke Lloyd with Strategic Wealth Partners. Back right after this. With us today for The Retirement Guys with Doug Harbaugh. Doug, an advisor with Strategic Wealth Partners. Also with us, an investment strategist with Strategic Wealth Partners. That would be Luke Lloyd. I'm Mark Elliot. Glad you're with us today. We're talking about really the challenges that really all Americans have in thinking that, hey, I know what's best to do with my money. And why are you afraid to open up and actually get some expert advice when it comes to your financials? Whether it's your 35, 40, you're letting it all ride in the Wall Street world because you got time on your side before retirement, trying to see if you can hit a home run. You get into retirement, now it's really not about home runs. It's about taking that occasional walk, take a single or a double, and if you get lucky and hit an occasional home run, fantastic. Just don't strike out. That's really the key when you get to retirement. So there was a CNBC survey that said 75% of Americans manage their own money, and we're trying to look into that. Why is that the case? And Doug, I would imagine that most people that handle their own money, and you can go back to 2008 when Leno and Letterman were joking that, I hope you're enjoying your 201k. We know it used to be a 401k, but it's not anymore because you've lost half your money. That people then go, ooh, I'm going all to cash. Going to cash. I'm getting out of the markets. I'm going all to cash. And people tend to or seem to be driven by fear when things go the wrong direction, just like March and April. Hey, I'm going to bail out. I'm going all to cash. Or when the markets are on a run, we're in the longest bull run in Wall Street history, March of 09 to March of 2020. Hey, we're greed. Fear and greed seem to drive us.
Yeah. And that's unfortunate. And I don't know where the study comes from that 75% of people manage their own money. I don't believe that to be a true. They're loosely correlated to somebody, or they're working with someone that's got a set it and forget it portfolio in their lives. And I think one of the reasons why I do this show every week is to kind of open people's eyes as to what's actually going on in the background. To let them know that it's okay to talk to other people to understand, what they should or shouldn't be doing. Especially, again, when people, if you're just sitting in a mutual fund and there's really been no changes over the last 10 years other than just tiny changes, that's an issue. I mean, we trade as often as necessary. And here's the good news. Trades don't cost you anything anymore, right? Before we had constraints that, stopped us from trading often because if you bought in and bought out, there was cost associated with it. There's no longer cost associated with that. And I think a lot of people think that when they change advisors, it's going to cost them money. And that's not the case, or they're going to be out of the market. So these do-it-yourselfers who are kind of on the fence, number one, you need to interview someone, right? And they're going to interview you. And you need to identify if you even like the person and then build some level of trust, right, in order to begin working together. If you got those mutual funds out there and you decide to work with someone like me and you get, you know what, Doug, I like you and I want to work with you. How does that work? What happens is you agree to work together. The difference between when you agree to work with fiduciary is we actually have a document that spells out our relationship rather than when you work with a broker dealer who just sells you some mutual funds and says good luck. At least we have something identifiable as to where we're beginning and where we're hoping to end, right? And that's written in black and white, so there's nothing hidden like in the broker dealer world.
Right. Not only do you need to find somebody that you like, but you need to find somebody that's going to be real with you at the same time.
Right.
A lot of people don't like to work with somebody, to do-it-yourselfers, because they feel uncomfortable that somebody's kind of telling them what to do or giving them all this different advice because they don't like change. People don't like change. I mean, that's fine. That's how humans are, right? So you have to step out of your comfort zone just for a little bit and get to know somebody else that's going to give you that information, tell you how it is, and give you the pros and cons of every single situation for your personal environment that you're in.
Right.
So, Doug, do you ever work with somebody that is a do-it-yourselfer, and they're like, for example, let's say the husband is the one that's handling all the finances, and he says, my wife really doesn't care about any of this, but I need somebody to know what I'm doing in case something happens to me so that she is not just kind of left high and dry. Do you ever work with people that are kind of do-it-yourselfers and you're kind of a consultant type person?
There's two different do-it-yourselfers in the world. There's a do-it-yourselfer who thinks he knows everything, and that's the kind of guy I'll never work with, right? Ever. They have their own beliefs, their own perceptions, and they're a one-man show, and everything they've gotten accumulated in life, they don't believe anyone can do it any better. So, no, I do not work with a do-it-yourselfer. Now, the second do-it-yourselfer that you were beginning to describe is somebody that just hasn't met someone yet. Right. I work with those people all the time. It's, again, you build a relationship, you build a clear level of understanding of what we do at Strategic Wealth Partners that helps them feel comfortable and allows for us to, as I would say, begin dating, right? And a lot of the process for people is nothing happens overnight. You give me a call, we talk, maybe we get together, we go over my findings, I send you home, I let you think about it, come up with more questions, and then we mutually decide if it makes sense for us to work together. In more circumstances than not, we put together a financial plan. So that means we then have another meeting or a phone call where we gather data, and then we get back together, a month down the road with a finalized plan after all these weeks of phone calls, meetings, and organization. And we then begin to implement these changes in your investment, right? So nothing happens overnight, and that's what I call it the dating phase, right before we make these changes. And I think a lot of people really think that things are going to happen overnight. It makes them uncomfortable, and that's just not the case. We have a set of systems and operations in force that allow for us to be very strategic. I'm not trying to be,
punny there.
Yeah, punny, as to how we organize things. But the biggest thing for me is for people to feel comfortable and confident in the organization that we have when we're putting together their retirement plans and then their investment plan, which again are two different things, but two things that work hand in hand. Right.
Well, and the key is we are a one-stop shop here. We do a little bit of everything here, but you aren't a one-man shop, and you got all kinds of different people behind you. That you have the investment team, you have the planning team. So Mark, you were that star quarterback, in college, right? And then you
might be stretching it a bit, yeah. But go ahead.
You also coached the quarterback, so Doug's the quarterback here. And then he's got all the different pieces in place: the offensive line, the wide receivers, the running back, and the fullback that's going to be there to support him whenever he needs something. So that's something that I think is really important that a lot of different places don't really have. They kind of just have that one man that's doing it all, and no one man can know it all. So you have to have that support system behind him.
216-800-9890 if you'd like to learn more about how Strategic Wealth Partners goes about creating that retirement plan for you, that investment strategy, the income plan, tax-efficient strategies, maybe even health and long-term care planning. How are you going to look at that? Because that's one of the biggest expenses you might face in retirement. And then, of course, legacy and estate planning. How are you going to leave things at the end of the day? You need a plan for all of those. And so it's not just about investments. It's not just dollars and cents. What do you want to do in your retirement? This is a great time to talk to Doug and the team at Strategic Wealth Partners. 216-800-9890. I'm Mark Elliot. Doug Harbaugh, Luke Lloyd with us from Strategic Wealth Partners. Glad you're with us today for the Retirement Guys. And we're talking about really a lot about the individuals and families and why some are a little reluctant in jumping into the financial planning world, especially if you don't have any experience in that world. It's crazy to me. So, Doug, let me throw you a hypothetical. You and your wife, Tamar, your daughter, Olivia, who's getting closer and closer every month as we speak to 3 years of age. So if you guys were going to go to Disney World, for example, would you just fly down to Orlando and then try to figure out where to go and what to do? Or would you actually have somebody that's in the travel world maybe help you come up with a plan?
Man, I wish I could tell you that I would use a travel agent, but I'm my travel agent. I'm a planner, so I know where you're trying to go with this. But you're asking a planner who plans other people's lives if he would utilize a outside party to plan something for
All right,
him.
so then let me ask you it this way then. All right, so have you ever gone overseas?
Me, yes.
Okay.
That was actually, it's been 13 years since I've been in Europe. It's been a long time. That I had nothing to do with. That was a company trip. For work that I did, and I was awarded an 8-day river cruise down the Rhine, and all I did was show up when I was told where the food was. So,
but if in that situation, Disney World, because you could go online, you could figure it out, hotels and what to do. But if you're going to go to, you wanted to go to Paris and to Italy and to Spain and all that, you've not really done all of that. I would think it would be good to get some advice from somebody that actually has planned those types of trips before.
There would be a significant level of planning involved for a European trip. We would probably spend time talking to our relatives in France. Mm-hmm. We would try to find local people. We would do a lot of research, have someone who can coordinate vehicles, flights, excursions, etc. So yes, we would use somebody that can help coordinate everything.
Because it's really the same thing of what you're doing. Now, Luke, you're not married, right?
Nope.
So when you go to Hawaii for 3 weeks, which is your typical vacation every year from Strategic Wealth Partners, and
right.
Doug puts the money up for you. So you've got 3 weeks. You've got 21 days. So you can bring 7 different women out for 3 days at a time. You better have a plan because you don't want them running into each other, right?
Oh, that would be interesting for sure, especially with my girlfriend.
He's afraid of his girlfriend, which is hilarious.
Okay.
Yeah, it's he's actually afraid of his girlfriend. His girlfriend runs the show. I hope she actually hears this. I might actually send her a copy of it. Luke says you're a bully.
I did not. You said that. Don't put words
Look
in my
how
mouth.
nervous he is.
Don't put words in my mouth.
Oh man, stop being a bully, Melissa.
Yeah. But no. I definitely
He's
would
turning red.
Blushing a little bit.
He's so nervous.
No, but it definitely would require a lot of planning for sure, Mark. And that's what it comes down to is you have all these different variables, you have all these different things happening, and if they aren't all in sync, then like you said, they're all going to run into each other, all the girls, and you don't want that happening.
Because there are surveys done that say people typically will spend more time planning for that 2-week vacation than they do planning for that 20, 30-plus year retirement. Would you find that to be true, Doug, or no?
Absolutely.
Luke?
Yeah, absolutely. I think that's absolutely true. I mean, you hear all the time when people are planning for the vacations during the summer, even if it's 1 or 2 weeks, I mean, they're putting hours and hours. I know this is a unique case because of the coronavirus, but, my family, we're supposed to go to Vegas next month. And the thing is, we planned this vacation like 4 or 5 times. So we were supposed to go on a cruise in May. That got pushed back. Then we were supposed to go on a cruise in July or August. That got pushed back because cruises, who knows what's going to happen with that. So now we're going to go to Vegas in July. So I think my dad put in probably 30 hours of man work trying to plan all this together. I mean, that's how much work he put into it. Now, when he plans for retirement, luckily he has me to help him. But a lot of people don't have that, and they don't kind of take the time out of their day. I would say most people aren't taking 30 hours, in 10, 15 years out of their time to plan for retirement. So I think that's really the key that you hit on, is that a lot of people aren't taking the amount of time that it requires to set them up properly.
So, Doug, it'd almost be the same thing with, I've got a lot of friends. I'm 60, so I've got friends that are retiring, and they're, 61, 62, but they were school teachers, or they worked somewhere where they had a pension. So I get that they're ahead of me because I don't have a pension. I've never had a pension. I've always had a 401k. And so I get that they've got more guaranteed income. And then I go, well, when are you going to start Social Security? And almost to a person, they say, well, we're just going to start at 62. Don't know how long it's going to be there. I know at some point in the mid-2030s, they're going to start taking 23 cents off every dollar that I was going to get. So I got to get it while I can get it. And I'm like, have you ever talked to somebody about this? And they're like, no, we know what we're doing. And I chuckle as they say that. And because Social Security is I think Social Security Administration says 70% of Americans get Social Security wrong for their situation. It's not wrong if you take it at 62, but it's not right. Wait till 70. Could be the right decision, could be the wrong decision. Because I think we just generalize things and go, well, I think I'm going to do this, and we don't really have somebody like your team, Doug, at Strategic Wealth Partners, to kind of help put it all together for us, where we really make an educated decision as opposed to, I think this is the right thing, I hope it works out.
Yeah, no, I really don't even know how to describe those people per se. And again, I think a lot of times, it's a trust thing. They've never really went outside of their comfort zone to really explore what's available to them. And it's pretty cut and dry. Someone like me, I will tell you precisely what'll work and what will not. Okay, if you don't want the truth, don't talk to me. It's how I function. If you want a mathematical evidence as to what to do, when to turn on Social Security, how the government pension offset will work, how the windfall elimination will all work, if you want to know how all that works, that's why you call a guy like me, because I will run scenarios with mathematics and tell you which one is more realistic or reasonable. And if you don't want the whole truth, then like I said, maybe you shouldn't call me, right?
Whole truth, but nothing but the truth.
Right. And that's what I'm saying. There's so many things out there where I've come across people that they're so, used to doing what they do, and I can show them something fundamentally better, and they're just going to keep doing whatever they do. You can't change people's perception, even with fact.
Right.
Because they perceive what they perceive. And that's why I say there's so many different ways to do Social Security. There's so many different ways to buy life insurance, to buy annuities, to buy stocks. And again, there's that combination and permutation that every individual needs in order to be successful. Not everyone should buy an index universal life insurance policy and use it as a max non-funded MEC, right? We're not going to get it. That's a modified endowment contract as a way to grow your investments. However, when strategically utilized, you can buy life insurance. You can fund that life insurance, and what it does is it actually buys you a low death benefit, and you overfund the thing. And then in the future, you take out loans which are tax-free, and it grows associated with an index. But when those are set up wrong, and they're with a company, maybe the insurance company per se, maybe the cap rates aren't as good, it can totally blow up the entire thing. So there's different ways to do that. There's different ways to buy these indexed annuities that people talk about all the time. That's when you hear those goofballs on the other networks talking about, it's a gamble, the stock market's scary, run from it. And he's trying to sell you an annuity. That's what he's doing. There's nothing wrong with annuities, but you need to buy the best of the best based on what's going on. I don't care if it's, this has been around for 150 years. It doesn't matter. It doesn't mean it's a good annuity, right? They're all created differently. And I can tell you right now, you have to be careful which ones you buy. If you want to know which one to buy, I can tell you because we have all the major annuities available to us, right? But we don't always sell them because, again, we then calculate in the retirement plan which is the most effective. Should we be 100% stocks, mutual funds, bonds, and ETFs? And your Monte Carlo score is 100%, meaning that you're a complete success? Right, then we don't buy annuities. Right? Or you run that scenario and it says, your Monte Carlo doesn't work. And a refresher of a Monte Carlo is a probability analysis that lets you know your success of winning, right? That's all it is.
I like to win, Doug.
Right. And if I run that Monte Carlo with an annuity in it and it goes from 100% to a 50, that means that you have a failing grade and you don't need an annuity.
Yeah.
Annuities are perfectly fine when it fits your circumstance. If you want to learn how an annuity does or doesn't fit in your world, or maybe you're thinking about buying one, why don't you call me first and I'll give you the dirt on it. I'll let you know the ins and outs of whatever you're thinking about buying. I'll let you know if it's the best, the worst, or if it's somewhere in the middle, or I can let you know if there's something better out there. But you got to call me at 216-800-9890 before you buy that annuity, before you buy that life insurance policy, before you buy whatever random mutual fund you're going to buy. Before you do anything, just call me. I'll be happy to tell you what's right, wrong, or indifferent. Right? You might be buying the best things in sliced bread. You might show me something new, but you got to call me first. 216-800-9890.
So here's another thing that maybe people think of, ooh, if I work with Strategic Wealth Partners, it probably costs a lot of money to partner with them. Is that really the truth? We're going to find out when we come back. Stay with us. This is The Retirement Guys with Doug Harbaugh and Luke Lloyd. We're rolling on right after this. With us today for The Retirement Guys with Doug Harbaugh. Doug, an advisor with Strategic Wealth Partners. They have decades of experience under one roof helping folks with retirement plans here in the Independence, Cleveland, and Northeast Ohio area. Also with us, of course, Luke Lloyd. Luke, an investment strategist with Strategic Wealth Partners. You can always go to the website, trg.swpconnect.com, swpconnect.com. There's a couple things you can do to find out more about where you are maybe in relation to the success or not successful retirement. There's Wealthalize, which measures how you're really managing your wealth. There's some things you can do on there on the Wealthalize box. There's also another tab you can push on that will put you into your own portfolio x-ray, where they're basically taking the top 10 stock holdings. You fill it in. Doug and the team get back to you to say, hey, I think you're doing really well here, maybe not so much there. Don't really know until you've done this for them. So there's a couple things you can do on the website, trg.swpconnect.com. I'm Mark Elliot. We're talking today about why so many people do not have a financial expert in their lives to help guide them, especially when it comes to retirement planning. And Luke, I'm going to go to you to start with, because when we started this program, you said, well, one of the things, I think people think the fees are really, really high and exorbitant, and so they think it's just too expensive to actually work with somebody in the financial world. Do you find that, or do you hear that?
Oh, absolutely. A lot of people are very fee conscious, and as they should be, right? I mean, people, we as people, we hate paying fees. We hate paying any money for any kind of, advice or any kind of product that we buy. So when it comes down to it, really, if you take a look at the services that advisors provide, I mean, there's all kinds of different thoughts and different, things that we utilize to try to make sure that we do come up with the most optimal product or optimal situation for your personal situation. And by doing that, we are doing all kinds of different things. We're doing tax planning, we're doing estate planning, we're doing all kinds of financial planning outside of just the investments. And a Vanguard study actually said that in itself has provided over 1% of value just in that. And that doesn't talk about, the actual investments itself. Rebalancing can be 0.25%. I was going to say 25 basis points, but Doug would get mad at me by saying basis points. But 0.25% you get by rebalancing your portfolio. Mutual funds are another great example. A lot of people that come in, a lot of our clients come in with portfolios where they're paying over 1% in fees just by the mutual funds that they own, and they can get the same exact thing by owning an ETF that tracks it the same way. That might be 0.03% compared to 1%. So all in all, right there, we've saved them roughly 3% of value. And that's not even talking about any of the investments or any kind of alpha that could be added by adding active management strategy on your portfolio. So there's a lot of things that go into it, and a lot of people are afraid to pay any kind of fee. And what I would say to those people is that there's a lot of things that can be added to your situation that adds a lot of value.
You know what I would say?
What's that?
You're already paying a fee.
Yeah.
You're paying it to 1-800-FREE-HELP.
Yep.
You're paying it to a third-party administrator. You're paying it to a cost share. I can't name all these banks, but there's some of these like investment places where you can go work with an advisor, and these places might be generally located in strip malls.
Yeah,
okay,
right? You don't want to go there.
Located right next to like a Menchie's, and you can get your ice cream and then go see the advisor in said strip mall. Well, they have these proprietary funds that they tout as the best things ever. So there's internal cost shares within there where they kind of they sell you a fund and then they pay themselves a fee on top of the fee within that, right? So you have to be careful on what you're buying. It's the same thing when you buy a target date fund through Fidelity or whatever, and that target date fund through Fidelity is investing in all other Fidelity funds.
Yeah.
Right? And that's why you're paying a fee somewhere. What I've actually found is to work with me and have a more complex process, you're either paying the same or less.
Right.
Right? Except now you know exactly what you're paying.
Right.
Because we're black and
where
white.
it's coming from. Because, I mean, there's so
Right.
many hidden fees.
Right, there's
all
nothing
these
hidden.
brokers are selling, like you said, A-share, funds that they're making 7.5% on up front. And these people, if you invest $100,000, you just lost $7,500 that you probably were not aware of. I mean, there's all kinds of hidden fees, and the only way that you can get out of not paying those fees is to be financially educated, or understand what exactly is you're owning or what you're buying from all these people that are trying to sell you something. That's the difference between a broker and an investment advisor. If you think you're trying to be sold something, you probably are.
Correct. That's very correct. Did I mention that was correct? And again, if you're one of those people that are working with somebody who might happen to have a business that might be in a strip mall next to a Menchie's, and that's what they do, they trick you. They put ice cream next to the broker. So
Strawberry ice cream, that's what I like.
You'll stop in and buy some toppings and be like, hey, let's go talk to such and such neighborhood guy. Not saying he's a bad guy, but you need to double check as to what you're purchasing. Like I said, I found on average it is almost always cheaper to work with a fiduciary who's not selling you commissioned products to earn a living, or it's the same. So you either want high-end, sophisticated, dynamic, strategic
There you go.
investment advice based on fundamental mathematics and technical analysis, and tax planning and behavioral coaching, and help with your estate planning at nearly the same cost or less. Or hey, you just keep floating down that river, in Mohican, on your brew canoe, and good luck.
So that number is 216-800-9890, 216-800-9890. If you'd like to find out some of the hidden fees. Roger Ibbetson's one of the, he's a really smart guy. There's no question about it in the financial world. And he said 44% of mutual fund fees, 44% of mutual fund fees are legally hidden. And so I had somebody, and it might even have been you, Doug, said, hey, well, your 401k at work, there's fees in that. I'm like, no, Doug, they love me. They're glad that I'm doing the Doug Harbaugh Retirement Guys radio show, so they're going to take care of all fees in that 401k. And he said, no, that's not the case. Because
No, they hate you. Go ahead.
Exactly. So we all have fees that we don't even really know, and they say, well, all you have to do is read that prospectus you get. I've never looked at one. I don't have time to read the fine print.
Probably because
whatever.
they're 400 pages and very boring to get through. They
Yeah.
put you to sleep very quickly.
Everyone looks at fees differently. I've had someone look at me and go, I can't believe I would pay anyone any amount of money. I'm like, well, you pay them anyways. They just never realize it. They've got $1 million portfolio, and their average visible fee is 1.25. Okay, so we're paying $12,500 a year to the Tooth Fairy because you've never met the guy that actually manages your money. And then there's a cost share, but you're probably paying $25,000 to somebody, on $1 million portfolio. By all means, if that's what you want to keep doing, or if you want visibility as to what's happening and you'd like to, have a reasonable aggregate cost, then you should probably check out a fiduciary, because your 401ks are not free.
So would you explain before you move on, Luke, and you can add what you're going to add, but fiduciary, you've said that a couple times. I think a lot of people aren't really sure what you're talking about, fiduciary.
So a fiduciary means that we legally have to act in the best interest of our clients. So, if you're on the suitability standard, which a lot of, brokers are, then they just have to sell you something that's going to be suitable, and that kind of expands their horizon to sell you products that probably aren't the best for your situation. They're just suitable, like you're able to get by. And this kind of actually adds into what I was going to say, Mark, was, people just kind of hope for their situation. You brought up the word hope, I think, last segment. And, if you're just hoping to get by, then you're not going to get through retirement. You can't hope. Hope is not a good word to use. So that's why a fiduciary is going to act in your best interest and make sure that they are going to be acting for your situation personally and understand your situation, like I said, just as much as you do personally. I mean, that's why, having an advisor that's going to be there to ask you those questions and get to know you and know your goals and expectations for retirement in the future is so important.
You can't take our hope away. We have to have hope.
Well, I've got hope, but you can't hope. You can't hope to make it through retirement. That's the words.
So you're saying we actually need a plan when it comes. That gives us a little bit better footing when it goes to your retirement. So if you'd like to sit down with Doug and the team at Strategic Wealth Partners, you can certainly do so. The number 216-800-9890. There's no cost for this. 15, 20-minute phone call. And you can come in and sit down with the team if you're comfortable with that. And if you're not, you can always do a virtual meeting. We're all figuring out how to do the Zoom meetings and all of that. So it's up to you. What are you comfortable with? But the idea is don't keep putting this off. Don't keep procrastinating. Let's start making some moves to some things that we can control, because so many things are out of our control right now. Start getting a handle on your retirement, where you are. Are you in the right place in the investment world? Do you know how much income you need month after month to retire the way you want to? At the end of the day, you just want to make sure you're going to be okay. If you pull the string on working and say, look, I'm done, pull the plug, I'm not going to work anymore, I'm heading off into retirement bliss, well, you can do that if you have a plan in place. And it doesn't mean the plan is written in stone. It's got to be flexible because things change, but it just starts with a phone call. 216-800-9890. 216-800-9890. So the question is, what happens when you call the team and Doug Harbaugh and Strategic Wealth Partners? We're going to find out that next. Stay with us. This is The Retirement Guys with Doug Harbaugh and Luke Lloyd. Back, final segment, straight ahead. Welcome back to The Retirement Guys with Doug Harbaugh and Luke Lloyd with Strategic Wealth Partners. You can certainly go to the website, find out more, trg.swpconnect.com, trg.swpconnect.com. One of the things I would really recommend that you do is go there and click on the Portfolio X-Ray tab and pop in some information so that they know more about your financial situation. They'll tell you, hey, your top 10 stock holdings, they're great, they're bad, they're indifferent. Hey, these are great. These maybe are a little tricky at this time, whatever, but it's a way for you to take a little more control over your own financial life, if you will, by sitting with the team at Strategic Wealth Partners. If you'd like to do that, it's 216-800-9890, 216-800-9890. So, Doug, let's say somebody called from this radio program. They said, Doug sounds like one of the nicest guys ever. He's not going to be judgmental at all, so we're going to go give him a shot. What happens when somebody does call that number, 216-800-9890? How does this process work? Because you said it's not like, hey, you call me up and our retirement plan's done in 5 minutes. That's not how it works, right?
Right, but let's be clear with the Portfolio X-Ray. It doesn't have to just be stocks. You can enter in your mutual funds. You can enter in your ETFs. Whatever it is that you may hold, you can enter in any holdings. And again, if you have more than 10 holdings, just give me a call or email me, and we can arrange for you to get me the tickers and symbols for me to put together that report that's at trg.swpconnect.com under the Portfolio X-Ray. I'm going to let Luke run with explaining what a meeting process looks like.
Yeah, for sure. So when you give us a call, we'll set up the discovery meeting. And that's basically when we get to know you and you get to know us. So if you call Doug, he's going to bring you, like you said, in the office, or we're going to have a Zoom meeting. And he's just going to ask you some questions and get to know you and your situation. I mean, that's like what I said before. It's really important to get to know the goals and expectations for the future, where you are now and where you're heading. After that, we'll put together the whole portfolio analysis and your whole situation analysis on your portfolio, your taxes. We'll do a whole analysis to make sure that you are on the right track. or if there's only any leaks in the plumbing, like Doug likes to say. I know you love to say that quote, leaks in the plumbing. So we'll see if there are any leaks, and we'll try to fill those gaps if need be, and show you any kind of ways that we could be helpful to your situation. After that, we decide if we would like to work with each other. And that's kind of the basis of how our meeting process goes. But I know over the weekends, since we do have these radio shows on Saturdays, I don't think Doug calls you back until Monday, I believe. Correct, Doug? But here soon, I guarantee he's going to be like, hey, Luke, you should start setting up shop on Saturdays and start answering these phone calls. So I bet that's going to be coming here soon. But that's
Luke,
not in place right
set
now.
up shop on Saturdays and
Right.
answer the phone.
Yeah, that's a bad idea, Luke. Bad idea.
Yeah. I should have never thrown that out there. You should
Melissa
never
is
do it
not
now.
happy when you tell her, I've got to work on Saturday. Doug said
She's
I'd
not
answer the
happy with
phone.
anything he does, but he's a knucklehead.
Hey now.
I have evidence that she just constantly has to correct him because he's not a worldly guy.
Well, hey, like you said, I can't tie my shoes very correctly, but I can tell you all the technicals and how to.
Yeah, he's real book.
I'm not that bad.
He's book smart. He's everything else
It's just
dumb.
the common sense. We talked
Yeah.
about that last
Do you know how to change a tire?
Oh, that came up over the past weekend, actually. Somebody asked me that. I bet you I could if I needed to. But
What did you just say? I bet at you.
I bet you I could.
No, you said I bet at
Bet
you.
you. I bet you I could if I needed to, but I don't. Off the top of my head, I don't know. How
Have
to.
you ever changed a car's oil?
No, I always take that into the shop.
Wow.
I do buy the.
Do you know where your air filter is?
No. I love cars though. I love cars, but I don't know much about like the actual engine or how they're put together.
Oh my god.
But but anyway, this Saturday or whenever Saturday is, if Doug needs me to do that, I'll do it. I don't care. I can work as much as I need to.
Luke, I want you to learn how to change a tire first, and then we'll talk about you coming in and answering the phones on a Saturday.
Yeah, that'll be our Saturday project. Learn how to change a tire.
Man, these kids these days don't know what they're doing.
216-800-9890 is the number, 216-800-9890. Do you think, Doug, that a lot of the reason why people kind of are a little hesitant, besides the fees that we talked about in the last segment, is that they go, look, Doug, I got this stock from my granddad, and I know he wanted me to keep this particular stock. He wasn't giving me a stock to help me down the road. He wanted me to have this particular stock. So we get a little judgmental, and we're kind of worried that you're going to judge some of the, well, why did you do that in 93? That was the dumbest thing I've ever seen anybody do. I think we get concerned that you're going to judge us.
Who's going to judge you? It's not a judgment, it's fact. If you're holding something that isn't good, I will present evidence, why you shouldn't hold it. If you're in love with something, or what I've come across with, inheritances when it comes to stock positions that, their great-grandpappy had purchased, sometimes we make an agreement that I can understand this is something that's valuable to you that your grandfather, had saved for you. If you want to hold on to a couple shares and it makes you happy, hold on to it. You know what I mean? But I can't let it dominate someone's financial world if it can potentially, upend it.
I think what you're hinting at is you have to be able to sleep at night. And that's not only just about volatility or, the way the market goes. It's also about, your sentimental holdings. I mean, if, like you said, if you need to hold something, then
hold on to some shares.
Hold
That's
on
fine.
to it to make you sleep at night.
Yeah, I mean, if that's what makes you feel better, hold on to it. But it has to fall into what helps you. My job is to help people, right? And sometimes people don't like what I'm saying. I'm not judging anyone. Judging someone's like saying, Luke, that shirt looks stupid.
You say that a lot, though.
I've heard that a
He
lot.
says that a lot, doesn't he, Luke?
Exactly.
Yeah, I
he
figured that,
does
yeah.
every day.
That's a judgment. When it comes to someone's finances, this is something that can devastate them financially. So if I'm telling you something, right, and telling you should be out of it because of X, Y, and Z, it's not because, you're a bad person. I'm telling you, hey, you should have gotten out of GE so many years ago. It's okay. You held on to GE because it was an inheritance, and you didn't know any better. You didn't know that GE was going through changes that would change, an overall, historic company into something completely different.
Oh, right. And no advisor should judge you on past mistakes. It's in the past, right? You can't go back to the past and change it anyway, so why hit on it? What you can do, though, is learn from the past, learn from a mistake, and that's why going forward in the future, that's why planning, you can't plan for the past, you plan for the future.
Correct. Good job, Luke. We're proud of you today.
These quotes, I'm on with these quotes.
You are on a roll, yeah.
I
Luke,
was on money.com today, too, and I think I did all right with that.
Wow, look at you. He's on
Luke, I'll say your
money.com.
shirt looks good.
Thank you. You
Yeah.
see that?
Yeah, you look good, Luke.
He can't see you.
Red on red.
Appreciate it. Absolutely.
You can go
So-
on YouTube and find these radio shows as well. I'll throw that in there too. So if you want to see us as well, it'll be on the website, trg.swpconnect.com.
Wow.
I like it. Luke, he's going. He's on a roll today. I appreciate that.
Can't change a tire, can't change oil, doesn't know where his air filter is, but he gets all the random appearances on money.com and whatever.
But he should, because at the end of the day, I don't really care if he knows how to change a tire or can find his air filter. I want him to make sure that my retirement plan is going in the right direction.
No, that's my job. We have Luke here because he knows a lot of the other wizardry stuff in the background.
Oh, okay.
Yeah, that's not true. I know a lot of that stuff, and I know, Doug's always dogging on me. That's the word. Doug is dogging.
Again, everyone here has a specialty, but the specialty all works together. That's kind of why we are here as one big team that works together. Luke's, really good at certain things, and he's not at other things. Me, I don't.
Doug's good at everything.
No, I know enough to be pretty dangerous in a lot of things, and I think that's the fact because I've made myself become more intelligent over time, but I also don't have a problem deferring to people that are smarter than me,
sure.
Right? And that's how we operate here. We have an expert in different areas to help, with everyone that comes through the doors.
Well, that's key number one is admitting what you don't know. I think that's Socrates, I believe. The first step to being intelligent.
Are we going to end the show on Socrates?
I'd love to, actually.
Well, we're going to end the show on Socrates. I thank everyone for listening again. If you want to check us out, trg.swpconnect.com. Give us a call at 216-800-9890 and be happy to talk to you. Thanks for listening. We'll talk to you next week.